Hello, everyone. Just a quick sound check. Please let me know if you can hear me nice and clear. Sound check. If you can hear me, please type in the chat. And let me know if you can hear me nice and clear. Cool. Thank you, Kira, Kira Binary Options. Cool. Thank you. Thank you for confirming. Hi. Quick sound check once again. Please let me know if you can hear me. Okay. Hello, everyone. Let's get started. Today's session of Nailing FX. Nailing FX is our series on analyzing the Forex markets. Today's session in particular, we will be looking at the week ahead. Now, apart from the presentation today, that's on Saturday, we have other presentations from our team at Nailing FX. So we have Pedro, we have Opa, we also have Andrew Han. So I'll take you through the schedule. We also conduct schedules, or presentations on tradewithufos.com, nailing FX. So let me quickly show you the calendar of other presentations we have during the various days of the week, all focused on Forex. So again, if you go to tradewithufos.com, get together, you can see the schedule of our the Nailing FX series. For example, this week on the 17th, we have Bert. Again, that's Bert. We have Bert. We have Pedro on Thursday. So this is a series of webinars looking at the FX markets from various angles. The ones on Saturday that I conduct are mostly focusing, planning for the week ahead. The ones during the week are slightly short term. So you can watch these if you can attend live, or they're even recorded, so you can catch up later. We also have the other sessions which are on FX Street. So if you go into videos, you can see the upcoming schedule here. And here we have the next one coming up from Pedro. That's on 18th of June. And if you scroll down, you can see, so I'm doing a session on the 27th. We also have Bert doing a session on the 23rd. So this is a series of webinars focusing on the Forex markets. And like I said before, we are planning for the week ahead. So, great day, Saturday. Market closed yesterday. It was an eventful week. The Fed came out and made an announcement that it wasn't even thinking of raising interest rates or changing interest rates. So that was new news for the market. Eventful week in the markets. We saw a slight reaction in the equity markets to the downside. So we plan for the week ahead. Look at the bigger currencies. Start with the dollar index, then look at the euro, the GBP, the Australian dollar, New Zealand dollar, Japanese yen, Swiss franc. So we're focusing on the major currencies during this session, if time permits. And some of you may be interested in looking at some of those other currency pairs. We will also look at other cross pairs if possible. A word of thanks to our sponsors, Axeria Brokers, before we start the session. So if everything is in order, let's get going. So we start by looking at the economic events and reports schedule for the week ahead. That's coming up between the 14th and 19th of June in particular. So we start the week. Monday doesn't look like we have any significant high impact reports. The high impact reports start coming out on Tuesday. Now these are as per GMT, so you'll have to adjust the time as per wherever you're located in the world. So we have traders from across the world joining in this session. Some of you watching recorded, so please do change or adjust your time according to GMT. So this is 12:30 GMT. We've got retail numbers coming out of the US. That's on Tuesday 16th, and later in the day around 1400 GMT, we've got Fed chair testimony. Then on the 17th, Wednesday, we have CPI numbers coming out of Canada. Again, we have Fed chair testifying. So a lot of important testimonies coming out from the federal bank. On Thursday morning, we have employment numbers coming out of Australia, followed by monetary policy assessment out of Switzerland. And the big one, we've got GBP interest rate announcement also on Thursday. Friday, also rather quiet day. The news starts coming out only around post noon on Friday GMT. So if you're looking for volatility, so the reason we start off planning for the week ahead by looking at the events and reports is to anticipate volatility and to know when we can expect volatility to come into the market. So this week it looks like Thursday we can expect volatility, especially after we see the employment numbers coming out of Australia. We've also got a report coming out of New Zealand around the same time. So be mindful if you're trading the Australian dollar or the New Zealand dollar on Wednesday evening, Thursday morning, you could expect some additional volatility. GBP, needless to say, as soon as the interest rate announcement comes out, we can expect volatility in the markets. A lot of speculation around, what gets announced. So they're at 0.1 at this point. Doesn't look like there would be any interest rates. The forecast is, no change of interest rate. But nevertheless, we could see some volatility coming out just after the interest rate announcement happens on at 1100 GMT. Okay, so it's a Tuesday afternoon GMT. We can have some volatility. The big one, the major part of the volatility is expected to start around Wednesday noon going into Thursday. So though that 24-hour sort of window is when it is most likely to be volatile for the week ahead. Okay, so that's in terms of news and events. If everything is okay, if we have no further comments, let's move in and look at the charts. We start by looking at the US dollar. Yeah. So US dollar being the biggest currency in the world, 80% of transactions in the forex markets are related to the US dollar. So it makes sense to first look at the US dollar and figure out whether there's strength or weakness to be anticipated in the US dollar, which will reflect on the other major currencies as well. Okay. So we start by looking at the dollar index, and our first step is to look at the bigger picture, which is the weekly. So since we're planning trades for the week ahead, we look at the weekly chart. Okay, so the weekly chart sort of gives us an indication of what's been happening in the past few weeks, what happened in particular in the last 1 week. And more importantly, we're using a trading app called the AutoClimate. So the AutoClimate is an app that looks at price action and gives us an indication of what is the climate. So, what will be a better idea? Will it be a better idea to go short, or whether it'll be a good idea to go long in this week? Or sometimes, like you see the thin dots here. When you see the thin dots, it means we don't have a confirmed climate. So sometimes we're just better off waiting and watching. But when we have the thick dots and a red one, we know it's a confirmed down climate. The climate is confirmed, and the color suggests the direction, which is down climate. When you have the sapphire dots, it's a confirmed up climate, so we look for long opportunities. When it's a thick red dot, we look for shorting opportunities. So AutoClimate is giving us an indication that look for shorting opportunities, even if let's say Friday and Thursday, last 2 days, Thursday and Friday, you must have seen the dollar rising, the dollar index rising, and you're probably looking at a few headlines saying that the dollar is gaining strength, right? So, but that's only from a perspective of the last 2 days. If you look at the overall picture, the big picture, the picture that is relevant for you to give you direction for the week ahead, this week ahead in particular, we need to look at the big picture, which is looking at the AutoClimate, which tells us it's a confirmed down climate. So look for shorting opportunities. Now, having we've got direction now. We know what to look for. Look for shorting opportunities. Now we move to the smaller picture, which is the 240-minute chart. As you can see in the watermark, that's the 4-hour chart. That's where we will plan our entries, targets, exits, etc. Okay. Yeah, before we go into that, just like to quickly review the trades that we have planned last week. So I did my first session last week. Just like to go through, what was discussed and what actually happened. So we had done the process was exactly the same. What we're going to do in this session is exactly what we did in the last session. And last week also, we had a confirmed down climate on the dollar index. We were looking to sell. We were looking to buy the euro dollar, buy the Australian dollar, sell the USDCHF. We had planned some entries. Our entry on the dollar index was planned on shorting at 98.91, stop loss at 99.14. Didn't quite get there. So, market kept shooting. So let's quickly have a look at what really happened. So we were shorting. So we wanted to short around the 99 area, and the week began here. So if we wanted to short here in the 99 area, we would have liked price to come up to this area where we would have placed a sell position with a stop loss above here. Okay. However, as the market opened, it took a strong direction to the downside, never really pulled back into this area. So therefore, we didn't get an entry on the dollar index. It was a similar story with the euro dollar. We were looking to go long, and we were looking to go long here, 1.1034, which I've marked here in 1019. So yeah, we have sort of taken this area, 1019 area. Yeah. At the end of the session, I'm just reading the comments. Can you explain more risk of sentiment could affect potential trades? Jamie Cruz, excellent question. So I'll touch upon this as soon as we get into the dollar index for the week ahead. Let's, at this point, I'd just like to review the trades that were discussed last week, right? To show you what happens, or what is the result you can expect, or what do we intend to get as a result of this analysis session that we are in. So last week we went through the exact same process. We started by looking at the dollar index and got our orientation. Orientation was to sell the US dollar. So if the orientation was to sell the US dollar, so the early part would have seen, so why is, so the dollar index is, the the king of all safe havens, right? So if there is any nervousness in the market, or if there's any risk of sentiment, the biggest beneficiary is the dollar index at this point. It also could change over in different market cycles. Sometimes it's gold that's the favorite safe haven, but off late it seems like it's the dollar index. So if there was risk of sentiment, then the dollar index would have gone up. But last week we were looking to sell the dollar index, which means we would have guessed that it is more of a risk on sentiment, and that's exactly what we saw most of last week, right? So if you check, let's say, the equity indexes for most of the week, it was up. It was only around Thursday or Friday that we saw the correction. Actually, to be precise, Thursday was when the big correction happened, right? Yeah, so for most of the week it was bullish. It was looking to go past the 3200 area, but then on Thursday we had that sharp correction, so which we already had the indication from looking at the dollar index. So by and large, if we're looking to buy the dollar index, or looking at our charts and analysis, we have uh, a disposition to go long on the dollar index, which would mean that we are in a risk of sentiment in the market. So the sentiment obviously gets reflected on the charts as well. So dollar index last week was a sell. We were looking to sell or short the dollar index. Didn't quite get the pullback into the 99 area, and therefore we didn't get our trade. Similar situation with the euro dollar, kept shooting up to the upside. We didn't get a pullback into the 1.1019 area, where we had placed the buy order. The Australian dollar, however, we did get our entry 6804. So let's quickly go and check the Australian dollar. So Australian dollar, we had planned long at 6804. 6804. Yep. So 680. So 6804 was pretty much the low of the week, right? So again, if you missed the analysis last week, you can watch the recordings. It's on YouTube in the same channel. So last week we had planned our entry 6804, stop loss 6777. So that was our target, or sorry, stop loss 6777. Okay, that was so that was stop loss, and target 2, very interesting. So the reason I'm just laboring over this is to just to show. So 6831 was target 1, which was our safety target. 6912, I just want to point out 6912 here. So yeah, 6912. So 6912, we missed by yeah, less than a pip, less than half a pip, in fact. So we missed target 2 the first time round, but fortunately it came down once again. It bounces up, and we are still in the trade. So we're up 63 pips out of the about 108 pips. 108 pips is where we had planned target 2 to be. Target 2 is still pending. Target 1 is hit, and we're 63 pips up on the second trade. We're still in the trade, right? So here we hope that early next week we see this going and hitting 6912. So just like to ask the room, did anybody get the chance take this trade? Again, we've just started trading together. How you said your stop loss for stock. Yeah, so if some of you have taken this trade, then we're still in this trade. And like we discussed last week, the plan was, we've just started trading together. This is a series, and you'll get the flow drift of how we plan and how these trades work out. So target 1 is hit, target 2 is pending, and so this is the net PNL for the analysis session that we had last week. Okay, so USD JPY we didn't have a trade. USDCHF we had a sell. Short position we wanted to short 0.9706. However, price never got there, so none of these got triggered. The only one that got triggered was the Australian dollar long, and we caught the low of the week. So when you put a buy position and you get the low of the week, what do you call that? You call that decent precision, would you say? I think that's very good precision. So let's see how we get this precision, right? How do we plan our trades and how do we get this precision? Let's go ahead and plan for the week ahead. So today's analysis, again, I'll be putting the trades in a new sheet, which is 13th of June. And when we meet next Saturday, we'll review what was discussed in today's session. Everybody okay so far? Any questions, comments, concerns, suggestions, any clarifications? So that's 13th of June. Let's get going for today. Yeah. So start with the dollar index. We've checked the climate. The climate is confirmed and down. So we will look to short. Now, if you're looking to short, we have so what you see if you're attending this session for the first time, you're seeing some fancy flying saucer like prints on the chart. So these are not actually visits by aliens. This is a trading app that tells us exactly where the imbalance is, and the imbalance between buy and sell orders, and therefore where there could be a likelihood of unfilled orders. So these are called UFOs, unfilled orders. And when we price hits an unfilled order area of unfilled order. So just to show you how this app works, so as soon as this candle was formed, as soon as this candle was closed, this area was plotted. Okay, so this UFO was plotted here, suggesting to us that there would be unfilled orders in this area starting from here all the way down to here, there would be unfilled orders, unfilled buy orders in this case, right? Because it's a green UFO, and you can see price rising here, so therefore it would be a green UFO. So the green UFO suggests that there would be unfilled buy orders here. Now, what do you expect when price comes and hits that area? If there are unfilled buy orders waiting in this area, what do you expect the reaction or the result to be? The reaction will be, if there are buy orders, pending limit orders waiting here, then this would be the expected reaction, right? As soon as price comes here, all these buyers are interested at buying at this price just below 96.49, all the way up to this range of 95.95. So they're interested in buying here. They place limit orders here. As soon as price comes and hits 96.5, those buy orders get activated, and because the amount of buy orders here are significantly higher than the sell orders, price just cannot stay there anymore. Because there are so many interested buyers here, price will rise. Okay, so that's how our trading app works. So that's the plotting of the UFOs. So that's the trading app that we use, and as you can see, you can get all the details. Let me show you where to get the details. So if you go into www.tradewithufos.com/Cherian, you can learn all about these trading apps, okay? The auto climate and the auto UFOs. So in this case, we know there are some unfilled orders here, buy orders. We know there are some unfilled sell orders located here in the 98 area. We also know that there are some unfilled orders located here in the 99 area. So 98, 99, around the 100 area, looks like there are a lot of unfilled sell orders. So right now, when we are on the smaller picture, which is the 240-minute chart, we're looking for entries, placing our entries. Where do we place a short position? Where do we place our stop loss? Where do we place our target? Okay, everybody clear so far? So in this case, when the bigger picture, which is the weekly chart, tells us that we should be looking for shorting opportunities, we focus on the red UFOs, where we are likely to find unfilled sell orders located, and the expected reaction is when price goes into this area, we expect a reversal. Isn't that what we want when we place a sell order? Let's say we want to place a sell order here at 97.83. Isn't that what we want? Price comes into this area and reverses, heading towards a target. Now, so on the lower time frame, looks like we have some choices, a few choices: 98 area, 99 area, right? So in this case, because it's a confirmed down climate and we can see a lot of selling pressure, a lot of bearishness on the dollar index, we can place our sell order here, right? So now, so the step one is to choose. Do you want to go here? Do you want to go here? Again, depending on market and the environment as such. So last week we had a few choices. We went with the 99 area. That's because we had the Fed funds rate announcement coming out on Wednesday. What happens with the Fed funds rate as a result is a lot of volatility kicks in. So what we said was, price was somewhere here. We said this is too close for comfort. Let's go with the one above. Right. So, but in this case now, no significant events. Remember, we started by looking at the economic calendar. We looked at the events and reports. Nothing, significant. I mean, one can never say what events can, come up across the world. Global events, nobody can predict. But at least looking at the calendar, nothing major is, scheduled, and therefore with if you're not expecting too much volatility, we can go with the nearest UFO. The nearest UFO is the 98 area. So now, again, we have choices at this stage, which is we can place our entry here, right? So we could take an entry because that is the entire. So the distance between the horizontal lines here indicates to us that entire area where there are unfilled sell orders, and so that's the range, right, where we are expecting the reversal. So again, we won't be that accurate. So last week we got we got very accurate here. Again, if you watch the recording, how the entry was planned precisely at 6804. So last time we got that level of precision. We may not necessarily get that level of precision. Then, not necessarily that price touches 97.82 and doesn't go to 97.83 or 4 or 5. It can go slightly inside this area because again, big institutions will place their orders in a range, right? So not at a specific price point. So they'll say, I'm interested in buying anywhere between, let's say, 96.49 to 95.95. I'm interested. If a price comes here, I'm interested. I'm placing my buy orders. I'm ready to buy in that range, right? It's not a specific price point. So therefore, we could find sell orders here in this range between 79.82 and 97.82 and 98.24. However, now we need to place our stop loss slightly above this line here. Again, when you attend our Forex courses, you'll know there is a precise way to calculate exactly how many pips above or cents above the upper horizontal line where the stop loss goes. But I'm just explaining the concept here. Right, so stop loss goes slightly above. Now, then the question would be, fair enough, I want to place my sell order here, and that's my stop loss. But now, am I comfortable taking so much risk, right? So this is almost 50 cents. So in my normal trading plan, do I normally take 50 cents of risk on the dollar index? Brown red. Yeah, I'll just explain that in a second, madam. Made Mandiri. Okay, so so then the only question remaining is, are we comfortable taking that much risk? Now, for those of you who are not comfortable taking that much risk, you have the choice of going inside that area where the concentration of unfilled sell orders are supposed to be. So you can take an entry here. That's perfectly fine. So 97.92, just in case you want to shave off some of the risk. So instead of taking entry here, you can take here, right? So again, Made Mandiri, you can read all about the UFOs if you go into the website. I just showed you the website. You can have a detailed explanation. We have a detailed explanation of how the app works and exactly uh, what those different shades mean. Okay. So we have a choice. We can take an entry here. For those of you who are even more conservative on taking risk, you can take your entry even here on the upper part and therefore take a risk of just 15 cents. So going all the way from 50, you can shave your risk down to about 15 cents. So now what would be the downside? So we discussed three scenarios, right? We can take an entry here. We can take an entry here. So these are three potential approaches to take entry. What do you think will be the pros and cons of each of these? So let's say trader A decides to take entry at 97.82, trader B decides to take entry at 97.93, and trader C takes entry at 98.16. What would you say about these traders? What is the trade-off? Who's got the best approach? So let me get some comments from the room. I'd like to make it an interactive session, right? So if you have any comments, trader A takes entry at 97.82, trader B takes entry at 97.93, trader C, okay, Jamie Cruz saying A. So what do you think are the pros? What is the advantage of for trader A? There's no right or wrong. So Raghu says B, so there is no right or wrong. These are different. All three are valid approaches. My question is, what do you think would be the pros and cons? Or what would be the downside for trader C? Or what would be the downside for trader A? Adjust risk position size, correct. So the trade-off is always between, will I get, so trader A has highest probability of getting entry, right? Again, you don't need to take all, so you choose between the three depending on your usual kind of approach to risk, right? So trader A, so trader A, so trader A has highest chances of entry, right? Highest chances of entry. Change the color here. Okay, so trader A has highest chances of entry, correct? So if price comes here, touches this line and starts reversing, only trader A got entry. Trader B did not get entry, right? So let me just make that default as well. Okay. Now trader B. So what's the advantage for trader B? Trader B has moderate chances of entry and lower risk compared to trader A, correct? So trader A has highest chances of entry, trader B has moderate chances of entry and lower risk compared to um, trader A, and trader C has the lowest amount of risk, least risk, and also lowest least chance. Make sense? So three different approaches of taking the entry. Last week in the Australian dollar trade. So by the way, Negin was there in the session. Raghu was there in the session. Did you take the Australian dollar trade? B, yeah, made monetary prefer B, less risk, high risk reward. Boyan, uh, forex trader, yeah. Okay, cool. You took the trade. Excellent, very good. Closed it. Negins closed the trade without target too. Okay, so usually, you can hang on if, I mean, for example, if you were looking at it yesterday, just before market close, Australian dollar was going up. But yes, in a way, you've, protected yourself from the weekend gap risk. So that was good. Yeah. But usually, you can hold on to these trades for like if you remember the discussion in our last session, we said this is a plan for 15 to 20 days, right? About 10 to 15 trading days. So the Australian dollar. Anyways, you got into the trade, and we are together planning new trades. Miguel also took the trade. Excellent, very good, very good. Miguel, what would you do with last week's setups that are not filled? Delete them. Miguel, excellent question. I will address that. Surely, I'll address that. So some of them may be relevant, some of them may still be relevant as we go through each of these pairs. So we'll go through exactly the same pairs, right? So we'll go to the euro dollar, GBP dollar, New Zealand dollar. This was the exact list that we looked last week, correct? So we're just going through the same process again, and as we discuss each of those currency pairs, we will decide whether to look for a new setup, or maybe the setup that we found last week is still relevant and we can still keep them on. Cool, Miguel? Okay, so we were on the dollar index, we were discussing three approaches, 97.8. So, a lot of traders. So in this case, being, yeah, so 50 cents on the dollar index. So ideal to go with the, so in this case, so again, depends from case to case. In certain cases, you see that, the UFOs are narrow and small, right? So to say, fewer Martians in there, right? So it's a small one. There are some that are very big, right? So this is a big one here. So it depends on the size and your usual risk. So Miguel, Sandeep, okay. Okay, so I'm just reading the comments in between. So in this case, if you're used to taking about 50 cents on the dollar index, and again, I think you're trading the dollar index, right? So if you're used to taking about 50 cents, then it's fine. In this case, I'll just go with 97.93, the middle approach, trader B. So in today's case, I'll be trader B. Okay, so entry at 97.93, stop loss goes at 98.31. So let's record that, and before we move on to the other currencies. Okay, so 97.93. So side, we will look to sell. That's because it's a confirmed down climate. 97.93. Stop loss at 98.31. Yep. So I put in the formulas here. The formulas here gives us, target one, which is safety target, is 1:1, which is, you know, uh, very high probability. And then if we have a high probability trade here, and as soon as we hit target one, then it becomes a risk-free trade because we exit half position here. So very important. Safety target refers to exiting with half position. For example, if you're going in the two lots, you're selling two lots or two contracts on the dollar index, two contracts at 97.93. Set your target for the first contract at 97.55. Let the second contract go all the way to 96.41. Okay, so this is set at about 4:1. Cool. So that's our plan on the dollar index. We've recorded it. Short position 97.9. Let's verify the numbers once again. 98.33. Yep, all good. Let's move on and look at what our plan. So if dollar index is a short or a sell, what do you think our plan on the others will be? Most likely, we haven't looked at those charts and we don't know what. So each of these charts, each of these are very, individual currencies representing huge economies. So they would have their own characteristic, their own strengths and the strength of the currency or the weakness of the currency at this point, at this stage. But by and large, it's the dollar index that sort of dictates the tone for the market. Chances for long, excellent, Negin, excellent. So most probably we will be looking to go long euro, long Australian dollar. So wherever the USD is the quote currency, we would most probably be looking to buy. We don't know yet, and we will be covering that in the session. But most probably we'll be looking to buy the euro, buy the Australian dollar, buy USD. Sell USD JPY, sell USD CHF, sell USD CAD. Make sense? So that is the reason why we start with the dollar index, because if you get an orientation of the dollar index, that sort of sets the tone for all your trading. Okay. Also gives you an indication. So to that extent, so earlier there was a question about risk on, risk off, right? So let me go back and address that question at this point. So at this point, if you're looking to sell the dollar index or short the dollar index, so are we in a are we expecting risk on or risk off in the markets in this coming week? So I'm just going to take a sip of water while your responses come in. So my question again, I repeat, is if we're looking to short the dollar index this week, this coming week, what are we expecting in the markets? Risk on or risk off? Risk off, perfect. So we can expect, even though, so again, to touch a little bit on how investors look ahead. So they'll read a headline like this: global economy faces a steep climb to recover from April's historic dive. So what does this headline sort of give you? What is it indicating? Is it indicating risk on or risk off? Correct. On it's risk on for sell. Correct. So my point is, when people look at these headlines, they get very influenced and they feel, okay, now it's risk off, right? Because I want to be putting my investments into a safe place, because global economy faces a steep climb to recover after April's historic dive. Oh my God, I better pull my money all out of all risky assets, get them into some safe havens, right? Right. So that's the indication that we get from. And let's say we look at what happened in the markets. So let's say we look at what happened in the markets. Yes, looking at the S&P 500 futures here. So we see a sell-off that happened after the Fed funds rate announcement came out, after the press conference. In fact, after the FOMC press conference, we had this huge sell-off, and then there was a lot of panic in the markets, right? So there's panic in the markets, which means now it's a risk off, and then you read a headline like this: oh my god, now it's better move my money into safe havens. But when we look at the dollar index, what is the dollar index suggesting to us? Dollar index is suggesting to us that it's risk on, right? Risk on. That's why we're finding a shorting opportunity on the dollar index. So we go by what we see on the charts. We go purely by um, whatever the charts tell us. We're not looking at the market sentiment through other sources of information. The chart gives us all the information that we need. So for example, if it was a risk off environment, why is this 3 weeks of selling that happened on the dollar index, right? Obviously whoever was selling here already knew that the people who can sell, or the entities who can sell to this extent, they already know what's happening with the global economy. So they were already selling the dollar index, therefore expecting a risk on kind of mentality. Okay, so I hope that answers the question. I was went back to the discussion of risk on versus risk off. Okay. Correct. So, irrespective of what headlines suggest and a couple of days of buying on the dollar index suggest, look at the big picture. The big picture tells you, what is more likely to happen. So, we planned our trade on the dollar index. Let's move on and look at the euro dollar. I realize that we just have 20 minutes left. Okay, we need to get through all this. Not a problem. So, euro dollar, again, what's step one? By now you're getting used to this. Step one is go and look at the big picture. The big picture is the weekly, and on the weekly, what do we look for? We look down here. We've got trading technology to help us, right? So we've got a thick blue dot, and it's a confirmed climate. Maybe in the next session I'll explain these numbers as well. So in the last session I didn't even have these numbers on, because I was introducing you to the concept of the thick blue dots and the UFOs. But now that you've seen it once, slowly we will try and discover more about this trading technology, what these numbers mean. At this point, let's look at the thick blue dot, which we already knew, right? So when we were on the Excel sheet, what did we say? We are most likely to find a buy on the euro dollar, which again our trading app is telling us, which is a confirmed up climate. If it's a confirmed up climate on the big picture, we come onto the small picture and look at where can we place the buy orders, right? So in this case, our unfilled orders, the areas where we can see reversals. So for example, again, this is the intended effect. So as soon as this red candle had closed here, this UFO was plotted, suggesting to us that there were unfilled orders located here. So then what you do is you wait for price to come into this area, short in this area, and place your target here. So that's how this trading app works. Okay. But in this case, with a confirmed up climate, are we looking for red UFOs or are we looking for green UFOs? Question. So we're looking for green UFOs, right? Because we have a confirmed up climate. We're looking for green UFOs. The first green UFO we find is here, which again is the same UFO that we found in the last session. But given that how much distance there is, so last week we were playing a little cautious. We had a UFO there. We did get a bounce from that. Excellent. Green. Everybody is saying green. Excellent. Very good. So we're in sync by now. Excellent. So last week we did have a UFO here. However, we were a little too close for comfort, so we said let's go with the one below. So in this case, again, so we'll adjust our entries at this point. This week we're not expecting so much volatility, so we can go with this green UFO here. No need to go to the green UFO here all the way down at 1.08. That'll be quite a distance. Euro dollar doesn't have that kind of ATR to make it all the way down here, but not to say that the that it is impossible. Anything is possible in the markets. You can see huge crazy moves coming out, 500 pips coming out in a week. That's entirely possible. It's not out of the question. However, most likely, probably, we'll see a movement up to here, right? So last week we were a little conservative. This week we will not be so conservative, given that we don't have any major events that could bring in that much volatility into the markets. We'll take entry at 1.1035 again. So again, if you're comfortable with taking that kind of so we're talking about 50 pips. So if you're comfortable taking 50 pips of risk on the euro dollar in your trades, then you can take entry here. If you're not comfortable taking those, taking that, we can go back to the original plan, take entry at 1.1019. That's already on the Excel sheet, right? So let's go back to the Excel sheet. That's already from the previous Excel sheet. So we'll go with the same entry and stop, just in case you are conservative, but now you're attending the session. You're also looking at the upper area, 1.1035. Okay, so this is, sometimes it goes slightly inside, sometimes it'll just touch the lower line, or in this case the upper area just touch the line and take off, in which case we're looking at the trade, we had our orders placed and we just missed entry. So again, the same scenario that we discussed earlier, the trader A's approach, which is taking a little more risk but then increasing your chances of entry. Trader B taking moderate risk and sacrificing a little bit on the chance of getting entry, and trader C least amount of risk and least probability of getting entry. So depending on what type of profile you have, what your risk appetite is, and normally how you take your trades, you can plan your entries at 1.1035 or take your entry at 1.1019 here. Okay. So I'll just put in 1.1019. That was our trade last week as well. So we had a confirm up climate. We take entry at 1.1019, place our stop loss at 1.10985. Target 1, target 2. Target 1 is safety target. As soon as we get to safety target, risk on the trade is neutralized. Then we let the second contract go all the way to target 2. Cool, everybody? Everybody okay with the plan? And you're in the session at this point. You can make a note. If you have notepads around you, or tablets or mobile phones, you can take snapshot, screenshot, make a record of this. 1.1035 is your possible entry point. Okay, so that's a plan on the euro dollar. Everybody okay? Let's move on and look at GBP dollar. I'll just wait for an okay from the room. If you're okay, I will move on to the next pair. Okay, everybody seems okay. So let's move on to look at the GBP USD. GBP USD, step 1, look at the big picture. Let trading technology help you, yeah? Rather than you look at the chart and I say, oh, this looks bullish, but there is a lot of selling pressure here. Take the guesswork out. Let trading technology tell you that based on probability and behavior of this asset, it is an unconfirmed climate. So that's what a thin dot looks like. Right? So climate is not confirmed. If climate is not confirmed, we are very happy to say pass, right? We want a confirmed climate. We want one of these two parties to be in control, either buyers or sellers. Whoever is in control will show up in the form of confirmed climate. And unless we are very clear, when we have a very clear direction, we don't want to take that, get into a trade, right? So that's the GBP USD, no confirmed climate. Let's move on and look at Australian dollar. I'm just purposely going to Australian dollar. I'm not actually going to take a trade here. That's because we are already in a trade. We are, expecting to hit target 2. So, I think when you get a trade like this, it sort of, I would say justifies a headline, or, the series being called nailing effects, right? So you plan your trades on a Saturday, markets are closed, but you're doing your analysis. All you do is spend 1 hour looking at the majors. You've got your numbers, you place your orders as soon as market opens on Monday. You pretty much don't have to look at it during the week. You can review it always, review it if there are any big events, but otherwise you go back to your trading platform and look at prices come in, it's hit target 1, taken off the risk, and gets to target 2. Well, you missed target 2 by a whisker. So let me show you what the high on that was. So sometimes trading can do that, and it can be frustrating. So the high of that candle was 69118. Okay, and our target too was 6912. Yeah, so when you miss a target by that much. But anyways, so that's the Australian dollar. We're still in that trade, so therefore what we will do is no point in taking another trade. In any case, we don't see any green UFOs close by, right? So even if we have a confirmed up climate, we really don't have any areas where we can place orders, so we let the Australian dollar be. Let's look at the neighboring currency, New Zealand dollar. Okay, so last week New Zealand dollar, we didn't have a trade because we didn't have a confirmed climate. If you notice, we had a thin dot, right? So we let it be. So no trade on the New Zealand dollar, no problem. We come back next week and we see a confirmed climate. The week is closed. So this candle closes, it shows us a confirmed up climate. Now we go and look for long opportunities. Where do we find long opportunities? We look below. So we got some red UFOs, we got green UFOs. Where do you think, which is the area we will be interested in? We'll be interested in the green UFOs, right? So let's now again here we get into a little bit of hey, do you move your stop to the second trade? Miguel, that's again up to you. That's a personal choice, a trader's choice. Like we had trader A, trader B, trader C, choosing entries. Again, that's a matter of trader A, trader B, trader C. There are some traders who will not touch their trades after they've set it. Some traders like to move their stop loss, so that's up to you, Miguel. Again, there's an easy way to find that. So run a what if scenario. So if you've made a log of all your trades, you can run a what if scenario on all the trades that you've taken in the past, and just make an Excel spreadsheet and start recording. Let's say I never touch my stop losses. That is my trading style. But this time, it's a Sunday, markets are closed. I want to refine and improve my trading performance. So I look at my trading log and ask the question, what if I was to move my target every time it hits target one? I were to move my stop loss, what would my net result look like, right? It'll have an impact on your net PNL. So I did make so much in real time, but what would it have been had I had a different style of trade management, which was moving my stop loss above entry, having hit target one? So you can do your spreadsheet, look at the PNL, and say, for my trades, again, it may not be universal for every single trader that you have to move your stop loss, or maybe you don't. But in your case, for your trades, from your logs, you're getting a very clear picture, very clear, a very straightforward answer: yes or no. Should you be moving stops or not? Had you been moving your stops, what would the productivity have been? What would the yield have been? Right? Is it better or worse? Simple way to find out, Miguel. Yeah. So New Zealand dollar, we again faced with that situation. We could take entry here, which is 6310, at spread 2 pips, and you'll have to put your stop loss all the way down here, which again depends on how comfortable you are. So you put your stop loss slightly below the lower line here, right? So we're sort of combining this area. So let's say stop loss goes at 6212. 6212. Now, purely a question of how much risk am I, comfortable to take. Okay. So let's say I take entry at 69. That's about 57 pips. So am I comfortable taking 57 pips of risk on the New Zealand dollar? Maybe not. So maybe I can go with the lower one here, right? So I'm sort of getting the lower end of, so I can take entry here. So let's go with this entry here, 6260. Going down here, just a shade less than 50 pips. So let me check the number here, 6222. Okay, we can go up to 6215. So that's about 45 pips, right? So 45 pips should be good enough for the New Zealand dollar. Let's try and get a little more accurate. 45 pips. Again, I'm pointing out this area depending on your trading rules. You can take entry anywhere in this area. Let's go with a conservative entry of 6251. Okay, at 2 pips for spread. So let's make it 6253. Stop loss goes at 6216. So again, let's record that. So no trade on the Australian dollar this week. We would rather go with New Zealand dollar. And again, it's a buy. And entry goes at 0.625. we need 2 pips for spread, so we'll put in 5.5. Stop loss goes at 6 to 6, and the formula calculates the target 1 and target 2 for us. Cool. Let's move on quickly. AUD we've already seen. USD JPY. First check. Big picture weekly, confirmed or unconfirmed. Look like it's an unconfirmed climate, right? So we move on. USDCHF, confirmed climate to the downside, right? So we look for shorting opportunities. We have a few opportunities here. We've got UFO1, UFO2. So in this case, given the weakness of the US dollar index itself, let's go with this one here, 9626, or even slightly higher. Yeah, so last week we had one planned slightly. Yeah, I think this will be fine, but you know, we can choose here. So let's go with this one here. Okay. Putting in, you know, a little bit of distance here. Again, USDCHF has been a little extra volatile compared to these, you know, some of the other currencies. As we saw last week, had some extra movement there. So let's get our stop loss there. If you have any questions, you can type them in now. I'll try and answer them before we end the session. Okay. So let's take entry at 0.9617. Stop loss goes at 0. Okay. And let's also quickly get the USDCAD. Any questions, you can stop me. I'm just, you know, going through it quickly because I think we've got the hang of it, right? So going through it quickly. USDCAD, again, we have a confirmed down climate, and within the confirmed down climate, now we go to the smaller picture, which is the 240-minute chart, and look for shorting opportunities. We have one here going from 3677 all the way up to so that's again about 60-70 pips. So in this case, what we can do is make a note of this area, which is the 1.37 area, just in case this is, you know, too much risk. 1.37 area. Now we can go and look at an even smaller time frame, which is the 60-minute chart, and we said we look in this area, right? The 37 area. Again, this doesn't, you know, narrow it down for us, so we can go one more time frame down. Let's go to the 30-minute chart. We're looking at the 1.37 area. Yeah, so now it's narrowed down a little bit. Okay. So 3712. So let's go with yeah, we've got quite a few red UFOs here, so you know, let's go with this area here. So we'll take entry at 3713. Stop loss goes here. Okay, so let's again make a note of those numbers, and I'll put up the Excel sheet just before the close of the session. We're looking to short at 1.3702 with the stop loss at 1.3748. Cool. So that's our plan. So I'll put in the so you know, that's a spreadsheet if you want to take a quick snapshot of this. Obviously this is a recorded session, so you can always come back and watch it. You know, maybe pause some of those areas. Maybe we've gone, you know, slightly quickly on certain areas, so maybe you can, you know, watch the recording, pause and play. So we've got a question: how do you filter all the pairs for the next week? I just focus on US. Or so in this session, made Mandiri, in this session we're only looking at the US dollar index, or rather, all the majors with the US dollar involved in it. If you look at some of our other sessions, right? So the Saturday sessions, we focus on the majors for the week ahead. So that's like your big picture kind of. Okay. Correct. You get the bias. Um, the Saturday sessions are the big picture. Some of you may say, this is too passive. You're just spending 1 hour a week on the weekend. You need a little more, some little more exciting, sessions. You can attend the other sessions. Yeah, the other instructors are far more exciting than I am. They find very, opportunities, short-term opportunities. So you can attend Andrew Hahn. You can attend Bert. Uh, okay. So they will be looking at the other pairs as well. So they'll be looking at the cross pairs. So Made Bandari, that was answering your question. You don't have to focus on the USD pair. You can obviously trade the other currency pairs. One of the advantages of trading the forex market is you have so many currency pairs to choose from to trade. In this session, just on the Saturday sessions, we focus on the dollar majors, just to give us orientation to see what is likely to happen with the big currencies. So for example, if you're seeing so in this session right now, we saw that the euro dollar is a buy, correct? New Zealand dollar is a buy. Now let's say you're trading New Zealand dollar against the Swiss franc. You know that there is strength on the New Zealand dollar versus a safe haven, right? So NZDUSD, NZDCHF. So NZD is likely to be stronger against the safe haven, which is US dollar. So it is also likely to be stronger against another safe haven, which is the Swiss franc. So it sort of gives you orientation of the entire market. That's why we look at the big ones in this session, but obviously we can trade the other pairs. And I would highly recommend watching these other sessions that we have from the Nailing FX series, right? So you can find it on the calendar. You can go to tradewithufos.com/get together. You get to see the whole calendar, and ideally attend them live, because these opportunities. So not like the trades that we found in our session today. We are on a Saturday. Most of us will have to wait till market opens on a Monday, place the orders. But a lot of the trades that I identified during these sessions for Andrew, Pedro, Bert, those are that happen very quickly. So you'll probably get it within a few hours. So strongly recommend watching these other sessions as well. Cool. We've come to the end of the session. If there are no more questions, let's call it a day, and happy and safe trading. So for those of you who are attending the session for the first time, some of you are attending the second time, some of you have attended with me even before. So if you're comfortable, you can place those trades in your live account. If you're not comfortable, initially place them on your simulated account. Once you get the hang of it, in a couple of weeks down the line, you'll see how this goes, what we do on a Saturday, and what happens during the week. When you find, you feel more comfortable, you can start going and taking these trades. Cool. Thank you all, and see you